All right, well, we will go ahead and get started. Thank you everybody for joining us today for Credit as an Asset, Affordable Credit Building Opportunities in the Community. We're glad you're here. And please note that this webinar is being recorded, and so it will be available afterwards for folks to view. So our plan for today is we're going to do some introductions, and then we have a couple of guests that will be sharing with us about credit building opportunities that their organizations are offering. We have Becky House with American Financial Solutions and Emerson Sekins with Northwest Access Fund. So thank you to both of you for joining us today. And then we've built time into the agenda. We've built time into the agenda to be able to hear from all of you, because I know that there is other work happening in the community around credit building. So we'd love to hear about what other organizations are doing, and also just some time for updates and announcements from organizations, because we haven't seen each other for a while. So that's the plan for today. So to get started, if you could please, we'd like to start with introductions. In the chat, drop in your name, your pronouns, your agency and role, and then your email address if you'd like to share. So that way we have the opportunity to share that with everybody who's here. And I'll start, I'll introduce myself for those of you I have not met yet. My name's Jennifer Quiroz. I use she, her pronouns. Many of you might know that Alice Cody retired at the end of June. And so I've just started in this role in July. For those of you that I haven't met yet, my background is in nonprofit programming, most of which has been in gender-based violence, but also financial empowerment. And most of my work has been in South King County. I stepped back from financial empowerment about 5 years ago, but I'm really excited to be back. And part of what I'm doing is meeting with folks across the network just to get an understanding of the landscape and how things have changed in the last 5 years. So I would love to hear from you. Reach out, let's connect. You know, I want to hear about the work that's happening in the community. And my philosophy for the network too is that this is a coalition that is for you. I'm here to support you in the work that you're doing. So know that I'm available and you can reach out to me at any time. I'd love to schedule a meeting. And I see that folks are putting their information in the chat. Thank you. We will have some time later in the hour to also do some updates and agency announcements as well. So we'll be doing that shortly. All right, so I'm going to stop sharing. And Becky, I would like to introduce Becky House with American Financial Solutions, who's going to get us started. Thank you, Becky.
Awesome. Thank you, Jennifer. I am going to share my screen. And does everybody see my screen now? Perfect. Awesome. All right. So I am really excited to be here, and I'm really excited to see how many people have come today to learn more information. And I'm actually really excited to learn more information from Emerson. And I know there's a few other people that are on the in the meeting today too that have some programs and products to share for credit building, which I think there's, you know, it's hard sometimes to find those in our area where we live that would be beneficial to our clients. So I'll tell you a little bit about what we have going on right now. This spring, American Financial Solutions, we launched a credit building program called Save to Build. The goal is to support low-income, marginalized and excluded communities with safe, low-cost credit building options. So we know, all of us here, you know, that information in our credit report is used by numerous institutions like tenant screening companies, utility companies, employers, and of course, credit-based services too. We also know that people need options to establish and rebuild credit, and things like secured credit cards, while they're, you know, wonderful products, are not available to everyone. So when we were approached to take part in this program, we jumped at the opportunity to do so. We've partnered with the organization Justine Peterson to provide this program. Justine Peterson is a not-for-profit corporation based in Missouri, and they also founded a community development financial institution, a CDFI, Great Rivers Community Capital. Great Rivers Community Capital funds the loans for this program. So the program works in conjunction with the financial counseling services that we provide, and it combines goal setting, credit building, and financial counseling. So let's take a look. Through the Save to Build Credit Builder program, clients can borrow $300, which is funded by the Great Rivers Community Capital. And under Save to Build, those borrowed funds are not distributed directly to the client as they would be with a traditional loan. Instead, they secure the loan and are deposited into a locked savings account. So the client makes 12 small monthly installment payments over a period of a year. Obviously, it's 12 months. Each monthly payment made towards the loan is reported to the credit reporting agencies, which will reflect positively on a credit report and may raise that person's credit score. That's the end goal. At the end of the loan term, those funds are then returned to the client from that locked savings account, and they provide that instant potentially savings cushion that the client can use to either continue to build their credit, which is what we suggest, or their savings over time. There's a few different people for who this program is a good fit. Typically, someone who, what we would call as credit invisible. So someone who has no activity in their credit report. They might have had at some point in time, but currently they don't have any active trade lines like a credit card or a student loan or a car loan or something like that. As long as the person pays their basic, monthly living expenses on time, they'd be a good fit. Also a client with what would be considered a thin credit file. So one that only has maybe one revolving line of credit or, charge account in it, or one installment loan. That could be a good fit. Or a client that only has collection accounts on their credit report, so they don't have any positive information in their credit report. Or a client that has been denied products or services in the past, and now they're feeling like, they really get the importance of having the strong credit score, and so they're interested in participating in that. And also people who have been recently discharged from a bankruptcy, so their bankruptcy is done, it's over. It's another opportunity for them to start building credit in a relatively safe, secure manner. One thing to note, that anybody who uses the program, it typically takes 6 months of on-time payments in order to establish a FICO score, which is the score that we are looking at and that we are measuring. So that's going to be an important factor there, is that FICO score, and not necessarily what people would see on a Vantage score or like a consumer site. The program most likely will not be beneficial if the client already has 3 or more active trade lines on their credit report. So, credit cards, store cards, mortgages, car loans, student loans, those types of things. If they're just not ready to participate in a credit building loan. So maybe they have active lines, but they're not paying those on time. They don't have any real source of income at this point in time. That's not a deal breaker. It just kind of depends on the circumstances. So that's something that they'd have to work with the counselor to look at, what income is coming in, what expenses do they have, and would a payment for this program fit within their budget? The client has a lot of negative types of debts, and they are talking about filing bankruptcy. If someone's in that situation, it's probably not the best time either. Or they just are, they're not interested, and they're not making on-time consistent payments on other bills or debts that they have. That might not be a good time for that person as well. And finally, the program is really for people who have a credit score of, I just roughly say 600 to 580 or less. So people who have scores over that amount don't typically see enough of an improvement to really benefit from the additional payment history. So we're really looking at people who have credit scores of less than 600 in order to benefit from this program. It's a short period of time. The barriers to participate in the Save to Build program are purposefully low. So the person has to engage in a full counseling session with a counselor at American Financial Solutions. This means that they're going to go over their goals, their current financial situation. We pull a credit report, which is a soft pull, so it doesn't have a negative impact on their credit. And we go over a detailed budget with the person. They also create a financial action plan that includes steps for building and maintaining positive credit. And that's going to be kind of that ladder as we work with them. The budget is, of course, very important, as the person has to have enough income left over to each month, of course, to support the program payment, which is about $28. And we'll see that in a second. The credit report does not have to be blemish free. So they can have collections, they can have late payments, things like that. As long as those types of things have not been added to their credit report within the last 3 months, last 90 days. The process is pretty straightforward. That they meet with a counselor, go over the budget, the action plan, their credit, as I was just describing. They complete an application, and that the counselor will be working on that with them. They sign their loan closing documents, and then they make those 12 payments on time every time. And then at the end, they can use those funds for continued savings or to continue credit building, which we think it's a great opportunity at the time when they get finished with the program to look at something like a secured credit card, because it's a good, now they have this $300 that they could use to fund that secured credit card to do the deposit and get themselves going there and add a different line of credit to their credit report. The payments, all of their payments, they can make them either for the program, they can make them either by phone, by mail, or by ACH, which is usually the most effective method of making payments. The payment dates, there are only 2 dates that they can choose, the 1st or the 15th of the month, just because of the way that the programs run. That is the way that Great Rivers, which is the CDFI, that's the way that they work it. So they've got the 1st or the 15th that they can choose. Technically, if they choose the 15th, they can make a payment anytime between the 1st and the 15th. The 15th is the default date that is set for on-time payments. If payments are made after the 15th of the month, they're considered late, and they can incur a late fee of $2.50. So we definitely don't want that. And that is one of the things that their counselor works with them on, is making sure that they're making those payments on time, watching those accounts to, just in case someone doesn't make their payment, so we can reach out and try to, work with an intervention there. So the Save to Build loans are 100% secured. So people can exit the program at any time with no penalty. The funds that the people have already paid in are returned to them minus any late fees if they leave the program early. The counselors, again, they do monitor those accounts, and they try to assist with any, needed payment interventions. The loans do offer a 15-day grace period for a payment to still be considered on time. After that, that's when they're assessed that $2.50 late fee. If they're not able to collect that $2.50 fee, then there could be a $25 NSF fee, non-sufficient funds fee, charged. After 60 days of non-payment, if they don't make their payments for 2 months in a row, they can close it before this, but if they don't make it for 2 months in a row, the accounts are automatically closed. That's just how it works. There's no collection costs on delinquent accounts. Any hardship, any fees that have been accrued can be waived in hardship circumstances. If it's closed early, Great Rivers will take the funds from the client savings account to pay off the loan, and again, any accrued fees. They report it to the credit bureaus that the loan is paid off. It's paid in full because it was a secured loan. They're paying it off with the funds that were already there. So it's a status that does not have a negative effect on the credit score. If the savings account does not cover the loan balance and any fees that have been associated, Great Rivers absorbs the loss. So there is no, like I said, no collection cost back to the person. It's just cut at that point. They're no longer, going to be making payments on the loan. It's a closed loan. If there's any money left over after it's paid at that point, Great Rivers will mail a check to the client. So I want to be clear that there is really no penalty if a client chooses to prematurely close the account, or if it has to be closed. They can always, reapply for it at a later day, but that's definitely not the outcome we want, and nor is that typically the outcome that occurs. We want people to have that 12 months of consistent history, because it's going to take at least that to really start establishing that score. So even though there's no monetary penalty for paying late, it could be a penalty in that there's really no positive impact to the credit score. Okay, so when a client successfully completes the loan, that 12 months, the counselor schedules and holds an appointment with the client to kind of celebrate that success and discuss what's the best use of the funds at that point. It's ultimately up to the client what they want to do. We'll talk about, opening up a secured credit card, savings, potentially paying down debt if there's something else that's out there that's occurred. They'll also complete any necessary forms and they get those funds sent back to them. We encourage the person to continue to engage in the credit building activities and again, use those funds to continue building. That continuation of credit building is key. So as many of you know, once an account is paid and closed, it begins to age out of a credit score and can ultimately be no benefit to the person's credit or credit score. So that's why we say we really encourage people to look at those other options like secured credit cards, and take that $300 and use that. Or perhaps another secured loan or something like that. They might even qualify for an unsecured credit card after the program. And this is where, financial coaches, whether they're at a different program or through our program, a counselor, can really help people wade through the information out there and make the most informed decision. And then the last thing I want to just share are the specifics of the loan. So the loan amount is $300. And there's a $12 loan origination fee, which is charged by Great Rivers Community Capital, again, the CDFI. They provide that initial $300 funding. So the total amount financed is $312. The interest rate on that is 12%, and that's a stated rate method. So all of it's calculated based on the actual number of days in the year, so 365 days. So 11 of their payments are $27.80. The final payment is $27.75. So in total, they're paying $333.55, 300 of which they get back through the program at the end once they've made it. So we like to walk people through some of the benefits and the cost savings of having good credit, positive credit information. And ultimately, they have to decide, the value of establishing credit in this manner versus a traditional credit card or a secured card, or another type of loan, or even as an authorized user on someone else's account. And I do just want to point out too that $33.55 does not come back to American Financial Solutions. That is Green River, the CDFI's money that they're making or getting, I don't know, whatever. Anyway, so we're excited to be able to offer this service and the product to people, and the response from those who are participating has been phenomenal so far. They love that it's a straightforward process. There's clear timelines in place and steps for success, and they have that support. So it's really exciting. Like I said, we just started this in spring. We just have a handful of people who are doing this at this point in time. And that is it. Thank you for letting me share. All right, I'm going to hand it over. Oh, Jenna,
I was just going to say thank you, Becky. I appreciate it. This is great. We will do Q&A in just a moment, but let's hear first from Emerson, and then there will be time for questions.
Okay, I'm going to share my screen. All right. I knew I was going to do this. All right, that's the presenter view on there, or it's the view, okay. Hi, my name is Emerson Sekins. I'm the Executive Director of Northwest Access Fund. Becky mentioned Green River CDFI. We are a CDFI as well, a community development financial institution. So we recently went through a strategic plan and updated our mission, and we've primarily been an organization that's financed assistive technology, and I'll go a little bit into what assistive technology is and why people with disabilities needed an alternative way to fund it. But we realized after all of the work that we were doing that we had built an infrastructure that we could respond to our community needs in other ways. And so now we offer customized loans, financial coaching, all for purposes that promote access to assistive technology, independence, financial resilience, and life opportunities. And so
hey, Emerson.
Yes.
I'm so sorry to interrupt. We're actually still seeing your view with the slides on the side.
Oh, is that better?
Nope, it's the same.
Okay. All right. says sharing is paused. Bring the window to the front. Not sure what's the difference. Now all my screens went black. Okay.
Okay, well, we can see, I mean, you're on the second slide now and we can see it. So we could just go
Okay.
forward if it's not going to work.
Okay. All right. We'll just do that. How about?
There we go. That
Okay.
works.
All right. So so we serve all of Washington State and all of Oregon. We work with people of all ages, all incomes, and all disabilities and health conditions. Excuse me. So what is assistive technology? So I always use this kind of any presentation to use a little bit of an advocacy for understanding and knowing about assistive technology. So for folks with disabilities, often people have to use external kind of items or resources to make their life work and to promote their independence, quality of life, safety. And so that can vary from software and computers to hearing aids, mobility devices such as scooters, modified vehicles, and then also home modifications. And so essentially it's any item that can help a person with a disability or an older adult kind of live life more fully and with how they want to live their life. All right, so folks with disabilities have a difficult time paying for assistive technology. There's kind of a misnomer that it's covered by government sources or insurance, or there's a lot of grants out there. And in reality, folks have so many different types of assistive technology that they might need, that they might be able to get some funding for a certain device, but not for others. And maybe that device will be covered only if it's for a vocational program. So it leaves a lot of folks with gaps in getting these tools in their lives to increase their independence. So for example, I was just talking with one of our clients who he's taken out 6 loans from us, variety going from a Kindle, he's low vision, and legally blind. And the Kindle he got was the first thing that allowed him to read in first 15 years. He just told him that last Wednesday. But he also mentioned that he has to self-fund to get these lights, automatic lights around his house that'll help his circadian rhythm. So for folks who are blind, you have a difficulty kind of managing kind of the light sources and how that feels. So just to show you that there's a lot of things that folks with disabilities need to afford, and there are a lot of barriers for folks to be able to access that assistive technology. And then other items. And so we're going to talk about our opportunity loan in a little bit, about how we're coming to try to meet some of the needs, particularly for some of the financial barriers that folks with disabilities face. So this is from a National Disability Institute study, and within the last 5-10 years, probably 5 years actually, we've started getting data on looking in specifically to the financial difficulties that folks with disabilities and families experience. So they're twice as likely to use non-bank lending. So for a variety of reasons. A lot of the time it's that folks with disabilities are accessing federal benefits where they might have asset limits, or income barriers. And actually taking out loans is a way of getting around asset limits, because if you can't save more than $2,000, you can take on a loan to be able to get that. So folks are put in precarious financial circumstances with their credit, and they often might only have access to non-bank lending to be able to get whatever resources that they need. And so they're more likely to be late on their mortgage payment, have overdrawn checking accounts, have to draw from your retirement, whether that's to fund the resources that they need for their disability, including their health costs. And because of all the health costs and the debt that can be accumulated, a lot of folks actually skip medical treatments that are recommended due to that. And then I don't have this on a slide, but the National Disability Institute also just found that a family with a person with a disability has to earn 28% more income to have the same standard of living as somebody else. And that is because of all the costs that are associated with having a disability. It's the added cost for assistive technology. It's for the things you don't realize, that maybe there's a lot of disposable medical supplies that you're using, and that means that you have a larger garbage bill because you have to have 2 sets of garbage. We're working with a family where that was the case. So a lot of these little things are deeply impacting families and are taking away from kind of other financial goals that they might have, such as home ownership or going to college or purchasing a vehicle, those kind of things. So I'm going to start off with just our general loan program. I'll go through this fairly quickly, but this is our original product, kind of the reason why we were formed. And we can help folks with assistive technology devices up to $25,000 with a 5-year term. So that's your hearing aids, braille devices, wheelchairs, scooters, etc. Really any device you can come to us and say it's going to help you, and you tell us how it's going to help you, we can consider a loan. I promise you that. And so we also have a recently expanded product for modified vehicles, so up to $40,000 and up to a 10-year term. A lot of folks might have a high credit score, they might have good income, but they're not able to access traditional loans, either due to high debt to income ratios because of other debt that they've had to take on due to medical bills, or more often than not, banks actually don't always know how to underwrite modified vehicles, because you're taking a Honda Odyssey and you're taking out a lot of the technology inside and putting in space age technology for a specific person with a disability, and they don't know how to underwrite both the vehicle and the modification. So we can come in and do a loan for the modification, or a loan for the vehicle that will be modified, or for them together. And we've had a really increase in requests for modified vehicle and for loans during the pandemic, because we've had more folks coming off of public transportation and not, where it's unsafe for them, and so they're pursuing personal transportation. Also, we're seeing folks that have kind of are not able to get bank loans because either the banks are increasing their credit standards, or the fact that people's credit scores maybe have taken a hit, or their employment is more uncertain, or is kind of has been interrupted, which prevents them from getting a bank loan. Similarly, home modifications. So we see a lot of folks that need to do a roll-in shower, change their floor from carpeting to hard surface, grab bars, different kinds of lighting, different kinds of cabinetry. We can do loans for that. And so this, we have an online portal that folks can go to apply for our assistive technology loan. Our opportunity loan is going through financial coaching, and I'll go more into that in a second. So you'll have to apply through a financial coach. But we also can set up an appointment to do the loan over the phone. Really the best way for you to fill it out. We want to make sure to be accessible, because we work with folks with a variety of different disabilities. So our loan decisions, and this is including for the opportunity loan that I'll go into in a second, is that we go through an applicant's budget. So kind of the application is also a financial coaching appointment, where we go through the applicant's budget, we review their income documentation, and we have to demonstrate whether somebody has the ability and willingness to repay the loan. And we take that very seriously, because we're working with a lot of folks that are on the margins financially. We know that we shouldn't be taking folks' last dollar, because inherently often having a disability means that you're going to have more emergency expenses potentially come up. That said, we pride ourselves on being able to work with folks, whether maybe that might be extending a term a little bit longer, or, don't tell my loan officer I said this, but we also try to remain flexible, in the sense that if somebody calls us and says that they've had a hard month often because of their disability. We worked with somebody who was a taxi cab driver, and when she had MS flare-ups, she couldn't drive, which meant her income took a hit that month, right? So because of the kind of community we support, we definitely try to remain flexible and make modifications if needed. Our loans under 3,000 go to our staff internal committee. Loans above that go to our loan review committee, made up of community members. Once we get an approval, closing dockets will be sent, and then a disbursement will be made to the vendor. And that's for the opportunity loan as well as our assistive technology loans. And that's precisely because a lot of the folks we work with are accessing federal disability benefits. And if we were to hand them that check for the loan for them to make the purchase, it could very well interrupt their Medicaid coverage or other issues. All right. So this is just some photos of the folks that we've worked with, getting folks scooters, modified vans, and Alexandria in the bottom left, we got her a Braille Note Touch, which is essentially the smartphone Braille device for someone to access the internet. All right. So our financial coaching, as I said, we've expanded our mission because we realized after taking a decade of loan applications from folks with disabilities, we realized what the research is bearing out, that folks could use extra support, not just for helping them reach their financial goals, but getting the information that they need to be able to manage their benefits and their finances at the same time. So we have certified benefits planners on our staff that'll be able to help folks navigate questions like, well, if I take this job, how is my healthcare coverage going to be impacted? Or how is my caregiving coverage going to be impacted? What's my monthly income going to be with the new premium that I might have to pay for my healthcare or for my caregiving? So we do that kind of more complicated stuff, but we also find that we're doing a lot of stuff just that's the basics of helping with budgeting, helping people open up bank accounts, encouraging folks to open up bank accounts. We work with a lot of folks that are getting their Social Security dependent benefits on a direct express card, although I think the company might be changing now. And so they don't have access to a bank account. And so we want to encourage that behavior to get folks to open a safe and affordable bank account, to not use those prepaid cards that can cost you more money than what you would with a traditional bank account. Access to check systems reports, support with opening an ABLE account, which is a specialized savings account that won't in fact impact someone's benefits. And then also we do a free credit report and analysis. And then we provide guidance on how to improve somebody's credit score. So, and then also to deal with medical debt and collections. We really are a big proponent of charity care, and I don't think it's talked about enough. So if you're working with somebody that has medical debt, they may be able to qualify by applying through their hospitals to either reduce or expunge the medical debt. We've actually worked with some folks that had money returned to them that they had already paid because they qualified before. So that can be, it's a very powerful tool for working with somebody. And that is a huge way of improving somebody's credit report, right? Getting these debt removed from the credit report. So this brings us to our opportunity loan. We really, when someone comes to us wanting to build their credit, we want to look to them as to what their financial goals are, what the timeline is for that, and then what is their most pressing need. So we realized that our assistive technology loans could improve somebody's credit, but it wasn't necessarily the priority that they had at that moment. And so we were looking at folks that had needed security rental deposits, they needed car repairs, they needed moving costs. So they might have gotten their Section 8 voucher, but they're on SSI, which is making $784, I think. And how could they afford a rental deposit and moving costs to be able to get into that housing? And so we really look to somebody and having them come to us with their most pressing need. And we talked to them about how our loans and positive payments on our loans will be reported to the credit bureau, and that regular payment is going to be something that can improve somebody's credit report. And going back to the flexibility, our goal, because of the disability community that we're working with, is not to harm somebody's credit. So if they're communicating with us and we agree that they can skip a month or make a reduced payment that month, we will report that to the credit bureau as if it's paid on as agreed, essentially. So because we've agreed to these term modifications. So if somebody's not talking to us, then we absolutely have to report to the credit bureaus. But our goal is to kind of do wraparound financial coaching. So if somebody's not making a payment, we're calling them, we're seeing what's going on, and we're trying to offer support. And so opportunity loans can be used for up to $2,500 and up to a 3-year term. They're paired with financial coaching. So For folks that want to refer to their program, they should refer to our financial coaching program, and it's within that program that we will identify whether an opportunity loan would be possible. We don't like the other way around, just because it oftentimes it doesn't work out because folks can't make that monthly payment and it's not a good fit. That said, you can refer to our financial coaching and we can see what we can work with on folks. And it doesn't have to be a $2,500 loan. We can do any kind of loan along that spectrum. I think our lowest loan we've done, and we don't like to do this too often, but we've done like a $50 loan for a specific assistive technology for somebody. All right, and so they can be used for any purposes that promote independence, financial resilience, or a life opportunity. And so far, as mentioned before, we've done security rental deposits, moving expenses. We actually paid off high interest debt because that debt was precluding them from being able to meet their financial goals because the monthly payment was so high. Especially with Care Credit Card, actually, we've paid off a couple people's vet bills for their service dogs. And they had to do, it's like you can't not invest in your service dog because of the importance of that animal in your life. I think everybody can make an argument for the importance of any dog in somebody's life, absolutely. We've done work with dental work and winter fuel, vehicle repairs, and for a variety of furniture that might be more accessible for folks in their homes. So I think that is it for me, and I will happily stop sharing my screen and look forward to any questions.
Great. Thank you so much, Emerson and Becky. I learned so much about both products. So I'd like to open it up for questions. If folks have questions, go ahead and raise your hand or stick them in the chat, either way. And we'll start off with a question Becky has for Emerson. So are there certain qualifying standards to show or verify a disability to be able to receive the loan? Like, do you need a medical note, social security letter, something like that?
Yeah, so we're actually a community-run board, so we're run by the disability community, and I think there's a lot of folks have just been tired over the years of always having to provide medical information to folks. So in the rarest of circumstances, do we ask for some sort of verification of a disability? But in general, for our assistive technology loans, we know you're not coming to us for assistive technology unless you have a disability. And then we really rely upon self-report for our financial coaching program. If someone says that they identify as having a disability, or their family member, that their child or their parent has a disability, we really want to be inclusive. And that's actually just born because I've seen people do mental loops to try not to identify as a disability because of the stigma that can be attached to it. So I'd rather serve a few folks that might not actually have whatever we call a legitimate disability than to not serve somebody because of fear of reporting or having to get this medical documentation to bring to the appointment. Also, people will eventually maybe have a disability down the road, and the information that they need will be helpful to them into the future thinking about it. So we're pretty flexible with regards to that.
Thank you. I just wanted to throw that out there because you told me that before, but I didn't know if everybody got that. So
good question. Thank you.
Great. So if you have questions, please raise your hand. And then also, I would like to open it up for announcements and updates from the community. So I'm not going to share my screen, but if folks would like to turn on your video, if you'd like, always optional. But we want to make sure we have an opportunity to network with folks and see you if we haven't seen you for a while. So I would love to hear either more questions, or if there are other folks in the community that have other credit building products that they'd like to share with us. We'd love to hear about what else is happening. Elizabeth.
Thank you. And it's nice to see everyone. And I'm so glad that your two organizations are offering such accessible products for the community. So thank you for all that you're doing. I did want to give everyone a little updates about some credit building products that Express Credit Union offers. I work with Express Credit Union. We have a product that's actually very, very similar to the one that Becky talked about. It functions the same exact way. we do that loan up to $1,000. It doesn't have the hand-in-hand financial coaching aspect attached to it, although we do have financial coaching partnerships that we refer our members to and highly encourage them to access that product. There's no minimum credit score required. It's the share secured credit card and the credit building loan product. I call it money on layaway. So those two products are offered through Express Credit Union. And we're about to launch a pilot loan product for those individuals who have suspended driver's licenses due to unpaid fines and fees. It's a loan product up to $3,000. There's no minimum credit score. There's no DTI limit on it. There's an incentive to visit with financial coaches prior to getting the loan. They'll get a discount on their interest rate. And then if they visit with a financial coach after they get the loan a couple more times, we'll give them a $50 deposit into their checking account. So the money is to pay those unpaid fines and fees so that they can get their license back. And then after that, we have a debt consolidation product and a car loan for those individuals if it makes sense, if they're interested and if they're in need, with a lot more flexible underwriting terms. Express Credit Union also is a CDFI. So we're a community development financial institution. We're a low income designated credit union. We're really focused on getting people banked access to affordable banking services. So we're inclusive, we're open to everyone. $5 to open an account. My email's in the chat, but let me know if you have any questions. Also, I could talk for days about Express, but I won't take any more time. So thanks.
Thank you, Elizabeth. That's wonderful. And if you have information about the two products you talked about or about Express in general, if you want to send it to me, I can put it in the folder from today's workshop. I just put in the chat. Everyone will have access to the PowerPoints and also eventually a recording of today's presentation. All right, anybody else? Any other announcements or updates from organizations, things that are happening?
Can I just go off mute, Jennifer?
Yeah.
It's Donna. Hi, everybody. It's so great to see all of you and even see some of the names on here, even if I can't see your faces. I work with HopeLink. I'm a financial coach and I manage our financial capabilities program. And I will just give a shout out to Becky, Emerson, and Elizabeth. We have been referring out and been partners to all three organizations. And I am so delighted to hear about the new products and some of the other products that we've known about for a while. Accessing credit is a real barrier for a lot of my clients. And so I'm really excited to share this with a lot of my clients. And so HopeLink, we have financial coaching up until, well, soon to be, we'll be hiring another coach. It's been me for the past 6 years, just doing all the financial coaching. So we've always been at capacity. So I'm really excited that we're going to be adding another financial coach. And, you know, it occurs to me, I'm hearing a lot of financial coaching. I would love to maybe explore down the road, and maybe this is something we can talk about, Jennifer, maybe having a kind of a cohort or a cadre of financial coaches in the community so that we can all just kind of get together periodically, share best practices, even practice with each other, and just create a pretty strong network of financial coaches throughout the community. I would love to be part of something like that.
Yeah, Donna, that's a great idea. Thank you. I think I heard you volunteer to help me wrangle folks for that.
Would be delighted.
Awesome. Thank you, Donna. And open for other volunteers as well. Great. I don't mean to put you on the spot, but Alex, I see you on here from First Fed, and I know that First Fed also has a credit building loan product. Again, don't mean to put you on the spot, but if you have some information, I'd love to hear a little bit more.
Sorry, I was on mute. Yeah, we do have a credit building product. It's fairly new to our bank. My boss normally speaks about it. She's on vacation. But yeah, it's kind of similar to the other loan that you guys were talking about. I believe ours is up to $3,500. We just launched actually a bank on checking account that we're trying to tie into Credit Builder. So we're really excited about that. We just launched that. I believe it was a month ago.
Yes, welcome to Bank On. Thank you, Alex, for the update on that. And can you tell us where First Fed is located? Oh, you're on mute again. Oh, there you go. Alex. Okay, we can't hear you. I'm sorry, I don't know what's going on. If my memory serves, you are in Skagit and on the peninsula, is that correct? I think that's correct. For those of you who are here from outside of King County, they have locations not in King County. So thank you for sharing that, Alex. Great. Any other announcements, updates, things that you'd like to share with the group? Okay, well, going forward, I do want to make sure, are you all seeing my slide or are you seeing the beach? Okay. Going forward, I do want to include this in our, I have been meeting with folks in the community and hearing that people are missing the networking opportunities that we've really missed during COVID and the pandemic. So, if you have announcements, updates, please send them to me. I will include them in our newsletter because I want to make sure that we're helping all of you promote the great work that you're doing as well. And then I want to take a couple of minutes just to talk about some of the work that the network has coming up. So next month, we have a couple of workshops happening. We have our Bank on Washington coffee hour, where we'll be talking about legal financial obligations, and that will be presented by Nick Allen from Columbia Legal Services. And then on the 30th, we have one of the workshops in our virtual learning series on child tax credits, plus updates on tax prep from 2021. And that's with Terrence Caballo, I believe, or Cabillo with United Way. And one of the things that I wanted to share that I was shocked by is, for those of you who are unfamiliar, United Way does an amazing free tax prep program in King County. And in 2021, they served 25,000 less people than they normally serve in a tax year. And so, they're really looking to hear from us about what folks saw happening with taxes in 2021. Like, where did those people go? Did they pay paid preparers for their taxes? Did they not file taxes? And then what were their concerns around taxes this year? Come join that conversation in September. And then we'll also get kind of a preview of what's coming up for 2022. And then we have our Bank on Washington Forum scheduled for October 19th and 20th. That will be happening virtually. It is 2 half days, mornings, and we have a great lineup scheduled. So far, we have confirmed 4 of our 6 speakers. We're super duper close to finishing confirming our speakers, but we've got Morgan Husel, author of The Psychology of Money, John Maxfield, who's an online writer and contributor, Dr. Cy Richardson from the National Urban League, and Chris Moreno from Catalyst Miami. Our theme for this year's forum is FinTech. So we're really thinking about technology. What does that look like when we're thinking about how our communities are using technology in relation to their finances? Who is it increasing access for, and who's being excluded by it? So it's going to be a great forum. I encourage you all to join us. Registration will be live in the next week. By the end of the month, it should be live. So you'll get an announcement coming soon. And Becky, it looks like you have some information to share about First Fed. Thank you.
Sure. I just wanted to let people know, First Fed, again, they have a bank on certified account, which is new. They do have a credit building product as well, which is an awesome, opportunity for people too. So I just want to make sure people are aware of some of the locations. They are kind of outside the scope of King County, which is actually a blessing for a lot of us because we don't all live right in King County. So there's some locations up north, Bellingham, Ferndale area. There are some cases or some locations out on the Olympic Peninsula, Forks, Port Angeles, Sequim, Port Townsend. Then they do, of course, have some locations on the Kitsap Peninsula, Silverdale, and then in the Seattle area as well. So they do have a lot of locations and a lot to offer. So I just wanted to make sure, I'm not sure what happened, but get the information out there.
Thank you, Becky. I should never speak off the top of my head without the information in front of me. Thank you for saying that.
Not to interrupt, we did just acquire a location in Bellevue as well. Sorry, I didn't put that when I was speaking. I apologize.
Oh, wonderful. Thank you. Thank you for that. All right. And so before you go, I want to have, I would like to have the opportunity to really hear from you. We have a survey that we would like to ask you to fill out, and I'm going to drop it into the chat in just one moment. Now you're probably all looking at my email. So if you could please take a moment to fill out the survey, that's really helpful for us. For a couple of reasons. The first is, as I've said, I'm new in this role, and so I am spending a lot of time listening to all of you, and your input really matters in what conversations we're having, what presentations we're bringing, what information we're sharing. So it's helpful to have that feedback about how this presentation was, but also what you're interested in coming up. And then for our next month's survey on tax preparation, we're also really interested in hearing from you about what specific tax questions you might have. Child tax credit's really timely because it's this new thing that just came out in July, and people, myself included, have had a lot of questions about how it works. But there's also other things that folks have questions about. So please take a moment to fill out the survey. And then I just also want to highlight the fact that in this survey, there's a few questions about you personally. As any nonprofit, the network, is partially funded by grants, and we need to collect some of that information to be able to offer that to our funders. So please note that it is entirely confidential, but it does help us continue to do this work and tell the story of all of the amazing work that you all are doing. So thank you so much. The questions are optional, so if you feel uncomfortable, you can skip them, but it is helpful for us to gather that information. And that is all. Thank you so much for your time today. I really appreciate it. As I said, I will send out a link to the materials from today. So that will be available soon. And then the recording from today's session will also be available, not quite as quickly, but sometime soon that the recording will also be available for everyone to view. Becky or Emerson, any final thoughts, parting words, anything to share?
No, thanks for the opportunity to present and look forward to working with folks. Yeah.
Same here. Thank you, everybody. It was great. It was awesome to be able to hear about other programs too and see how it's all working out. I love it. Thank you.
Great. Thank you both for joining us today. Thanks everyone for coming. Have a good rest of your Tuesday.
Bye.
Thank you.